Gwaltney Group, RE/MAX results. Welcome to Rochester Real Estate, featuring Robin Gwaltney from Gwaltney Group RE/MAX Results and Andy Brownell. Here's Andy Brownell on Rochester's News Talk, 1340 KROC AM and 96.9 FM.
Good morning, everyone. It's Andy Brownell, News Talk 1340 KROC AM and 96.9 FM, along with Robin Gwaltney, Gwaltney Group RE/MAX Results. Good morning, Robin.
Good morning. How are you?
I'm great. How about yourself?
Well, I would like to say I'm all rested up and ready to work, but I'm kind of fighting off a cold. We went on a cruise. We were gone for a week, and it was amazing, and it was continuing education. Do you love that? It's our 5th year in a row that we've gone on a January cruise where we get all 15 hours of our required continuing ed. So we come back, and we usually feel like, okay, I'm ready to hit the ground running. My continuing ed's behind me. It's a new year, ready to start the season off, but I'm just battling a little bit of a cold, and it's slowing me down a bit.
That's, well, I don't know. I don't know if you should be punished for taking a cruise, but it seems like...
Maybe. I don't know. I'll be fine. I feel good. That's the main thing. And of course, I'm, paranoid, so I've tested for COVID 2 times, but I don't have COVID, so just a cold.
Yeah, there's a lot of that going around right now.
'Tis the season, I guess.
It is. It definitely is. Well, what's been happening since you've been gone? Have you been brought up to date?
I've been reading as much as I can so that I'm prepared for this show. I came across some interesting things. One thing was based on Minnesota rents, and I found this little chart that showed that in 1988, the median rent was $350 a month. And in 2022, the median rent was $1,350 a month.
Wow.
Increased by $1,000.
This'll date me. The cheapest rent I ever paid was $50 a month. And
wow.
Yeah, it was that bad. It really was. I was there for a month and a half, and I said, I cannot live like this anymore. And I think the most I ever paid was $750.
Okay, I think that's more than I ever paid, but my first rent was a $350 apartment. It was a nice apartment, but I shared it with another gal, so, I only paid half of $350, so it was pretty darn good.
And now?
Yeah, no, I don't want to rent. I'm glad I don't have to do that. Okay, so as far as real estate goes and buying houses, I'll give you a glance at the most recent Rochester market report, and this is through Thursday, January 19th.
Oh, okay.
So as of Thursday, we have 98 sales pending. We have 170 properties active, and we have 806 that have sold or closed in the last 6 months. Okay?
So it has slowed down.
Oh, gosh, yeah. I mean, you mix, like the second half of 2022, as those interest rates went up, the number of sales went down, and then throw in the holidays and the end of the year and the dead of the winter, and yeah, it slowed down, but it's going the other direction. The phone's ringing like crazy. I think I personally have 3 or 4 new listings coming up, and buyers are coming out of the woodwork as well, so it's good.
That is good. And the real positive of those 3 numbers you gave out was the number of active listings. It hasn't been that high in a long time.
Right. And so that's the thing. People are saying, oh, but I can't buy right now. The interest rates are high. But this is the deal. Because we have more inventory to choose from, sellers are more willing to negotiate. So you are able to ask for a little money off, or ask to have some repairs made after the inspection, or ask them to contribute to your closing cost. And I think those days that's going to happen are going to be short-lived. I'm going to say you can mark my word, I'm going to say by late spring, early summer, we'll be right back to you're paying full price and you're paying over ask, because the interest rates have settled in a little bit. I mean, I've seen people locking in at less than 6% for a 30-year conventional.
Really?
Customers with good credit. Yep, I have had a couple of them in the last week, so this is good. And I've also seen that, even though they're talking about the Fed's raising the rates, again, not the mortgage rates. Nobody seems to think it's going to affect the mortgage rates. So I think we're settled in for a while, and I think that gives people a good peace of mind. And so, a few months ago, we were thinking, geez, by this time, they're going to be 7.5% or 8%, but that's not the case. So I think people feel good. And then you pair that with the fact that you can actually go and negotiate a little bit on the price. You end up with a monthly payment. And really, what have I always told you? The only thing that matters truly is what you're paying per month.
Right.
Right? I mean, that's what pays. When we talk about rents, it's 100% interest, guys, 100%, because you're building no equity at all in that apartment. And people don't think about, I rent and I pay 100% interest, but that's exactly what it equates to. So it doesn't really matter what the interest rate is per se, as long as your monthly payment fits your budget and you're comfortable paying it, because you're still building equity and the price is still going to go up. Maybe not at definitely not at the same crazy pace it did for the last 2 years, but the prices are still going to go up. So it's still, real estate's a solid investment, and more people are embracing it. And I think we're seeing less of the negativity in the media too, because for a while it was just, oh my gosh, you turn on the TV like October, November, even into December, it's like, oh, the world's coming to an end. Don't buy a house. The rates are ridiculous. You can't get it. But fact of the matter is we're still low on inventory. Even though we have 170 active listings, we have more qualified buyers. So time to get out there and buy while you can still get a deal, guys.
Yeah, that's the key indicator right there. You still have that. It's still a bit of a seller's market, not
right. And so,
but I was going to ask you, do you think the psychology of this, now that you've seen the rates settle into this range, and it's that angst that occurred when the rates went up is kind of diminished? People are, this is the way it is.
I do. Okay. Yep, I do.
Good.
Yeah, I think it's going to be good. And I will say that as far as what we have for active listings, we have one listing that's under 100,000. We have 15 that are between 100 and 200. This is a number that's going to blow you away. 200 to 300, which is traditionally always the most popular price point and the lowest in inventory. There are 37 available right now.
There you go.
Between 300 and 400, there's another 29. And between 400 and 500, another 21. 500 and 600, there's 14. Between 600 and 700, there's another 14. Between 700 and 800, there's 13. And then the high-priced houses, so 800 and above, there's only a total of, 12, 13, 14, 26 total. And 8 of them are between 8 and 900, 4 between 900 and $1 million. We have one listing between $1 million and $1.1 million. We have one between $1.1 million and $1.2 million. Now there are 5 between $1.2 million and $1.3 million, and there's one between $1.3 million and $1.4 million, and we have 6 listings at $1.4 million and above.
Oh, wow.
I know, it's crazy. So those are obviously new construction. But it's quite a bit. So the market average, this number has changed so much. The market average right now is 498,681, and the market median is 433,450.
That remains very elevated.
Isn't it something? And I can remember when a $1 million listing in Rochester, Minnesota was a pretty rare event.
Oh, yeah.
And now, 6 houses over $1.4 million, 5 between $1.2 million and $1.3 million. I mean, those are some high-end houses. So definitely our market is changing, and we're getting more and more and more expensive homes. And when your median market price is $433,000, $450,000, that's pretty high. Now, the ones that sold and closed in the past, the 806 that have sold and closed in the past 6 months, the median market for that was $365,446. So right now there's just more expensive homes because guess what? Those are the ones that are taking longer to sell because those are the ones that people aren't excited to buy when the interest rates went up. They'll just stay put. And especially, we've talked about this, because they're situated in the house that they've probably refinanced in the last couple of years. They're locked in for the next 28 to 30 years with a pretty desirable interest rate. So they're saying, you know what, we'll just live in this house a little bit packed, a little bit crowded, but with this nice low interest rate that we know we can't get again, instead of moving up to that bigger house.
Even though if they calculated out their monthly payments, they might find out it would be okay.
Exactly. And I mean, we don't really have a exorbitant amount of inventory in many of the price ranges, like all the way up to 700,000. We are still at a 2-month absorption rate. So if all of those sold within the next 2 months, we'd be out of inventory 700,000 below rather.
Oh, okay.
So it's not like we're sitting here with a huge excess of listings, okay? And then 700 to 800, we've got 5 months worth. 800 to 900, we've got 8 months worth. 900 to $1 million, we've got 2.7 months worth. But boy, if you're sitting there right now with a house on the market between 1.2 million and 1.3 million, those 5 that we have listed provides us with 30 months worth. So like I said, people aren't moving up into that high price range right now by design.
But that seems like what I would see in a normal market. In my opinion, you would.
Yeah. No, you're absolutely right. Yep. You're absolutely right. You're absolutely right.
The one number that I always want to hear about is the average days on market.
Okay. Average days on market. Right now for days on market, the average is 73 and the median is 78.
Okay.
Now, just to give you an idea how that has changed.
Still less than 3 months.
It's still less than 3 months, but those 806 homes that sold in the last 6 months, the average days on market was 31 and the median days on market was 18. So if you saw houses in your neighborhood selling just 4 or 5 months ago in 18 or 20 days, you're going to be extremely discouraged when yours is taking 78. I mean, it's just normal. But the bottom line is it's only because we have a little more inventory and because some of our buyers put the brakes on. Now those buyers are seeping back out in. So I think that median, next time we talk about that, we might see it drop a little bit. But 6 months from now, I can promise you it'll be back down to probably not 30 and 31, but right around 45 is my prediction.
Okay. Well.
Okay, you write that down so we can compare my notes, okay?
I remember. Don't worry.
All right. Okay.
We do have to take a break, Robin. We'll do that, and we'll return in just a moment with Robin Gwaltney, Gwaltney Group-RE Max results on News Talk 1340, KROC AM and 96.9 FM.
We'll be right back with Robin Gwaltney and Andy Brownell on Rochester Real Estate. This is News Talk 1340, KROC AM and 96.9 FM.
Shop Menards today.
Gwaltney from Gwaltney Group-RE Max Results and Andy Brownell on Rochester's News Talk 1340, KROC AM and 96.9 FM.
Welcome back, everyone. Robin Gwaltney with Gwaltney Group-RE Max Results with myself this morning, Andy Brownell. All the statistics we just talked about, Robin, seem like once again more of a normalization of the real estate marketplace, not the doom and gloom and catastrophe that we saw on all the cable TV news channels and the headlines a few months ago.
Exactly. It's so important. I have to tell you, I still get people that call me and say, is there going to be a big foreclosure boom? Are a lot of people going to lose their houses? I mean, I know the housing market is crashing. I'm like, wait a minute, what? Where are you getting this information? No. So let me say this. Today is nothing like 2008. And I want to share some really important key variables between what happened in 2008 and what's going on today. Okay?
Yeah.
So job cuts, nets of gains and losses. The last housing cycle in 2008, there were 8 million jobs cut or lost. in the current housing cycle, that number is 0.
Right.
Okay.
Seeing job
0.
gains, right?
Yeah, 0. Total jobs, household survey, the last housing cycle, 138 million people had jobs. In the current cycle, 158 million. Now, it seems crazy because it seems like everybody still needs more help, but there are more people working now. 158 million jobs versus 138 million back then.
That explains the worker shortage.
Yes. Subprime loans, okay? They were prevalent in 2008. There were so many of them. Now there are virtually none, okay? New construction in the previous 5 years. So we're talking how many houses were built between 2003 and 2008 when the housing market crashed. There were 7.65 million built in those 5 years previous to 2008. Currently, in the past 5 years, there have only been 4.6 million built. So 3 million less houses, fewer houses.
I'm actually surprised that it was 4 million. I thought it would have been lower.
Yeah, well, nationwide, of course.
Yeah,
but
of course.
Yeah, I don't feel like we've been definitely slow around here. Inventory on the market. In 2008, there were somewhere between 3.8 and 4 million homes on the market. Today, there is somewhere between 1 to 1.2 million. So essentially a fourth, okay? The mortgage delinquency. Now, this is where I'm telling people, don't sit back and wait for this plethora of foreclosures to be coming at you, because it's probably not going to happen. In 2008, there were 10.1% of the mortgages were delinquent, and now currently it's 2.6%. And the homes in foreclosure, back in 2008, it was 4.6% of the homes were in foreclosure. Currently, it's 0.6%, so not even 1%.
6.
Yeah, so there's no similarities whatsoever between what happened with the housing crash of 2008 and the big COVID upset that's created all the chaos now. Okay?
Everything you're describing now points to a strong real estate market, just not the hyper insane market that we had.
Thank God. How many times do I have to say thank God? I mean, that could not keep going like that. It was absolute craziness. So yeah, now we're back to, boy, you want to look at houses? We might have 4, 5, 6, we might have 7, 8 to see. Let's go look at all of them. Then let's make a decision, and then let's put together a good, solid offer without having to worry about how much over do we have to offer to get this house. And guess what? We can even ask for an inspection. And then once we do the inspection, we can even expect the seller to contribute towards some of the improvements. So it's a much, much more sane time to be a buyer than it was a year and a half ago.
What I like about it, if I was in the buying mode, would be that I could put together that list of, absolute needs with you, and then my list of wants with you, and I might actually find something that addresses most of those, rather than, we're going to have to go with this one because odds are this one will get snatched up, and this is as close as we'll ever get, even though it's not really meeting all my needs.
Exactly. So, we are hearing everybody's saying, oh, okay, so Robin, maybe the housing market isn't going to crash, but what do you say about the recession? Because, 2 out of 3 economists are forecasting a recession in 2023. So how does that affect, and how does that affect the housing market? Well, honestly, I'm going to tell you one thing. A recession does not mean falling home prices, okay? So basically, I have a little chart that shows me that historically, there's a graph, I wish you could see it, that going all the way back to 1980, home prices appreciated in 4 of the last 6 recessions, okay? Appreciated. And in the other 2, they just basically, other than, of course, 2008.
Right.
But in 1981, they dropped by 1%. But then in 2008, they dropped by almost 20%, 19.7%. But when we had a recession in 1980, home prices went up by 6.1%. And And, I said 1981. I made a mistake. It was 1991. I need glasses. In 1981, when we had a recession, home prices went up by 3.5%. It was 1991 when they dropped by 1%. And then in 2001, we had a recession, and house prices went up by 6.5%. And then in 2008 was the only recession that everybody remembers, and that's when the home prices went down by 19.7%. And in 2020, when we had a recession, home prices went up by 6%. So I just want people to understand that a recession definitely doesn't mean you're going to start losing the value in your home.
Right.
Okay.
Very clear.
Very clear. And research also helps paint the picture of how recession does impact the cost of mortgage rates. Okay. And I have another graph that shows that. Guess what happens to mortgage rates, Andy, during recessions?
Usually they drop.
They drop. In 1980, they dropped by 4.25%. In 1981, by 5%. In 1991, by 2.25%. In 2001, by 0.63, so not even a percent. But then in 2008, even in that crazy, prices dropped by 19.7%, the interest rate still dropped by 1.13%. And in 2020, they dropped by 1%. So, seriously, in 2023, market experts are saying that mortgage rates will stabilize, just like I was talking about. We've seen the peak last year, and that's because mortgage rates tend to respond to inflation.
Sure.
So, big takeaway is you don't need to fear the word recession when it comes to housing, okay? In fact, experts say that recession would be mild, and housing will play a key role in a quick economic rebound. Hallelujah. Buy those houses, people.
Okay. We do have to take another break, Robin. We'll do that back in a moment with Robin Gwaltney, Gwaltney Group RE/MAX results here at News Talk 1340, KROC AM and 96.9 FM.
We'll be right back with Robin Gwaltney and Andy Brownell on Rochester Real Estate. This is News Talk 1340, KROC AM and 96.9 FM.
They say they'll get your biggest tax refund.
Gwaltney from Gwaltney Group RE/MAX results and Andy Brownell on Rochester's News Talk 1340, KROC AM and 96.9 FM.
We're chatting with Robin Gwaltney, Gwaltney Group RE/MAX results this morning. And Robin, before we run out of time, do you have any new listings you want to share with us?
I do. And some that aren't exactly new, but they're less than 78 days on the market, so they're still very prime. I have a coming soon out in Byron. This is 529 2nd Avenue Southwest in Byron, and it's just a cool house that sits not far from town. If that intersection where you turn right to go to Quick Trip,
yep,
the original Quick Trip, okay, then you turn left and it's just a little ways down that road. Really beautiful setting. It's a 2-story with 2,000 square feet on the above ground with a total of 2,962 square feet, 4 beds, 4 baths. It's got a 2-car garage, and it is coming on the market for $515,000.
That's a nice
so
house.
It's a nice size house and a nice little acreage. It's a nice little spot. I've got a beautiful 2-story up on Phoenix Road Southwest, 2273 Phoenix Road. This one's been sitting on the market for a little bit, but recently the price got dropped significantly, so it's $525,000, and I've noticed a lot of showings have been coming on because now it must have hit the sweet spot, so hopefully that one will go quickly. So if you've been watching that one, just so you know that price has dropped and it's not too late to jump in and get it. We've got a nice affordable one at 4215 Manor Woods Drive. That's a 5-bed, 4-bath. It's got 2-car garage. It's a 2-story with a total of 2,291 square feet, and that's $349,900. Got a nice little condo up at 85 Connor Circle. It's a 2-bed, 2-bath, 2-car garage with a total of 1,200, just under 1,200 square feet, 1,196 for $274,900. Out in Casson, we've got 610 2nd Street. Oh, actually, I lied. I accepted an offer on that one. I won't tell you about that one. And in Byron, we have 43 13th Street Northeast. And and that one is a 4-bed, 4-bath, built in 2022. So new construction is actually under construction. And that one is going to be $614,900. And then we've got Coral Court, that place up by the Mayo Northeast.
Yep.
We've got a really nice unit up there, 4 beds, 3 baths, 2-car garage, just under 3,000 square feet for $444,900. And one last one is a lovely house up on Starburst Drive. It's a really unique split level, 3-level split built in 2015. That is $509,000. So lots of pretty houses, lots of great prices, and lots of inventory to choose from. So happy house hunting. And certainly if you need help, please give me a call and I would love to assist you. My phone number is 507-259-4926.
All right, Robin, until we can chat again next week, thank you so much.
All right.
You have
Talk soon.
Great weekend, a great week. That's Robin Gwaltney with Gwaltney Group-RE Results here on News Talk 1340, KROC AM and 90.
This is News